Welcome to this Material Indicators tutorial. Today, I'm going to walk you through setting up a 3commas composite bot to automate your trades using the MTF signals from TradingView into 3commas. First thing we're going to do to get started is log into our 3commas account. Once the account is loaded, I want you to click on DCA bot on the left side. The next step will be to click on Create Bot. Okay, now you're in the 3commas bot creation interface. The first thing to notice is there are two tabs. If yours opened up on the Gordon tab, those are some automated bots that 3commas provides. You want to be in the Advanced tab because that's where we work to create our bots for the signals that we get from TradingView for MTF. So first thing you want to do is give your bot a name. In this case, I'm going to be setting up USDT Tier 1 composite bot. This bot is going to trade across all the USDT coins. And when signals come in that are tier 1 signals, it's going to execute the trades. So you want to give it a name that will be clear for you to what this bot is supposed to be. The second thing you're going to do is you're going to have already followed the tutorial from 3commas for connecting your exchange account. In this case, it says paper account, but for you, it might be your Binance account or whatever you're using to trade these. The next thing you want to do under bot type is you don't want simple because those are one pair. You want composite so that you can trade across multiple pairs. And because I'm choosing USDT pairs, I'm going to click clear here. And then I'm going to go down here where this blue button says USDT all. And I'm going to click that so that it preloads all of the USDT pairs, in this case on Binance. So you can see that all these pairs have been loaded. Now, one of the things that we warn about a great deal is not trading pairs that have really bad or low liquidity or they're not appropriate. So you don't want to take on a trade that barely has $1,000 of liquidity in the market at any given time for a pair, but that gets loaded automatically because it loads everything. So what we would recommend you do is go through here and pick the coins that you think are the best ones for you to trade. Now, there is at the bottom of the page the ability for you to say that you don't want to take any deals that don't have a certain amount of volume or liquidity in a given 24-hour period. That'll help you eliminate some of the barcode or coins that are lower volume. The other thing is that after trading MTF for a while, you kind of get used to coins that, you just don't want to trade. You don't want to get the signal on, but they may have the appropriate volume, but you just don't like the coin. You got burned by them, whatever. I'm not picking one right now that's occurred with me on, but let's say, for instance, you don't like USDT DOC. To get rid of that coin from the potential coins that will be traded for you, you just click the X and it'll get rid of it. Let's say I don't want seller. Same thing, just click the X and get rid of it. So that's how you get rid of them and get them set up. All right, so there are going to be a couple of spots throughout this bot that are a little complex. And I would prefer to reference you to the 3commas, FAQ, and Wiki in order to learn some of these more complex things. They are complex setups for your trades, and they can do great things for your trades, but they can also cause you some danger. So it's really important that you understand conceptually how these things work before you set up these bots. In this case, the first section here is strategy. So how many deals are you willing to have open at any given time? So if you have 150 or 200 coin pairs in your list of potential deals, how many deals are you willing to have open at any given time? Are you willing to have 10 open at a time? Are you willing to have 5 open at a time? You have to factor in here whether or not your balance will support it. And that'll also be on your order size as a factor. But the other thing is how much money do you want out at any given time? And do you want to have money still available that you can use for other types of trades that you may do that you want to be able to execute? So that's the first square. Next is this a longer or short strategy? Well, it is possible to potentially use MTF for short strategies. Right now, we're going to focus on long strategy. We don't typically use short strategies. So you're going to be doing trading long on the MTF indicator, and it's ideal for that. Second thing is do you want this to quote in the price in the left part of the pair or the right part of the pair? So the left part of the pair is USDT. The right part of the pair is whatever particular token you're looking at. We always choose the quote pair, the left side of the pair. It's the easiest way to do it because you're dealing with USDT or BTC. So the next piece is how much do you want to bet on your trade? So because we're using USDT pairs, we can say we always want to enter a trade of $150 or $5,000, whatever makes you happy and makes you feel most comfortable from a trading perspective is the best way for you to make that choice. Now, this is an area that I was talking earlier about with regards to complexity, the safety order size. So safety orders are also known as dollar cost averaging. The idea behind them is that if your trade drops below your entry price, if it reaches a particular percentage level or price level below your entry price, that you are actually going to add to the trade. So let's say a token you were buying was costing you $1 USDT per token when you bought it at the entry point, and it dropped to 50 cents a token, so you're down 50 cents. You could have set up a way to, at the 50 cent mark or the 75 cent mark or the 85 cent mark, whichever you prefer, you could set up a way for the trade to buy more of that token at that lower price. So then when you average out the two prices that you bought at, $1 and let's say 50 cents for this example, if you bought the same amount each time, in this case, we would put in $100 again. If you bought the same amount each time, then that would have averaged your price out to about 75 cents per token. So the idea behind safety trades, or what's normally called DCA trades, is you're trying to reduce your overall cost of acquisition by putting more money in to buy more of that token at a lower price. That makes it easier for you to reach your take profit threshold. And that's the entire idea behind DCA strategies. So another strategic consideration for you is what type of orders do you want to book? The signal comes in from MTF. Your token is at a particular price. Do you want to make it so that you don't buy that token unless it's at that price? Or do you just want the bot to automatically buy no matter what the current price is? Limit price will protect you from the coin taking off on you and being way above where your profit level is because it bounced very quickly. So it keeps you from executing a trade because you couldn't get it at the price you really wanted it to in order to get to the profit level you wanted. That's a good thing. The bad side of a limit order is that you may not get your trades. And because some of these are so volatile and MTF trades on dumps, at the bottom, often you could miss out on a lot of trades because these prices are moving so rapidly. Market orders are orders that say, I want to buy $100 worth of this, and I want it as close to when the signal comes in as possible. And that's what a market order is. So deal start condition. In this case, we are using a TradingView custom signal. There are a number of other signals in here, but we are going to be sending a signal from TradingView into 3commas. So we want to set this as a TradingView custom signal so that the bot starts when a signal comes from TradingView into 3commas. So take profit levels. Again, this is a really important personal decision. You have to decide what you're most comfortable with as the level of profit that you're willing to take in order to make your trade work. So some people shoot for the moon and want to try to get 5% out of every trade. Other people will say, no, I don't want to take that chance. I'm very happy with getting a small amount, say 1.25% every time. And I don't care if it goes way beyond that. There are methods within 3commas for you to take a trailing profit. So that's this right here. And once it hits your profit, it will keep going up and not sell the deal until it drops whatever amount of percentage you put in here. So let's say your token started off at 50 cents and your take profit was at 60 cents. Then it kept going up from there. If it kept going up after it hit 60 cents, it won't close the deal. It'll wait until it goes up a bit and then drops by, in this case, 0.2%, and then it'll close the deal. Trailing profit can get you more profit out of a trade, but it also can cost you money, because if a coin goes up, in our example, say to 60 cents, and then it suddenly has a fast drop, it may hit your 0.2%, but it may have gone even further below that. So you'll need to weigh for yourself whether you're willing to take the chance that the price may drop below what your original target profit is if you're using trailing take profit. And that's what this is really known as. You can choose to have your profit measured from total volume or from your base order. So the idea here is if you're using safety trades or DCA trades on your trade, you may only want to have the profit measured by your original order of $100. We prefer ourselves in our own trading, not making a recommendation to you, to take the percentage from total volume, because once you're invested completely in a trade, you want to know what's gone in and what you've made. Stop loss. Good trade practices always recommend a stop loss, and this is no different. Stop losses are going to be something you determine for yourself. So you may put in 3.0%, or you may put in 4.5%. Whatever you decide has got to be what you determined you're willing to risk and how often you think you are going to risk that. It's very important that you set this and that you're smart about it and that you know what level of risk you're willing to take. So stop loss action, this just means if I hit my stop loss, do I want to close the deal or do I want to close the deal and stop the bot? Now, you may think that in certain market conditions, you want this bot to automatically stop the bot. But what you have to consider is that if it does, then any other signals that come in for any other coins here are not going to get processed because you have effectively told 3commas, don't trade this bot anymore until I turn it back on. You'll note here that it's saying that my stop loss should be below the last safety order. That's because down here there are safety orders set on this trade. I'm actually, when I book this trade, not going to put in any safety orders. So in a minute, we're going to change that. And then that red text will go away. Stop loss timeout. Sometimes a coin will dump fast, but then have a tendency to return back up to where it was very quickly. And so even though there's a quick push down because it's low liquidity or whatever, you don't want that trade to close because you know for some reason that this coin often does that. People are manipulating, whatever the reason may be, and you want to make sure that it's going to stay open. So you may want to set this for 5 minutes or 60 seconds or whatever to say, if it hits my stop loss level, don't close this trade until 60 seconds has passed. At the end of 60 seconds, see if it's still at or below my stop loss level. If it is, then let's close the trade. So that's the idea behind a stop loss timeout. Safety orders. So as we talked about earlier, safety orders are dollar cost averaging. In other words, safety orders will allow you to add to the trade that you have open to lower your original overall cost of acquisition, as I discussed earlier. This can be an incredibly powerful strategy because if you have a coin that often dips down 2 or 3 or 4 times, it will allow you to lower your overall cost so that when you try to hit your take profit percentage, you actually have a shorter distance to go to get to that take profit percentage. The downside risk is if a coin continues to bleed out and continues to lose money and continues to drop further and further and further in price, you're putting more and more and more into a trade and you could end up losing a huge chunk of it. So it's really important to understand that crypto is incredibly volatile and that if you trade with DCAs, while it can do a lot to dig you out of a hole, it can also do a lot to devastate you. So really keep that in mind. For this particular setup, we're going to go with 0 safety trades, but this would say how many total safety trades you want to allow on a given trade. Max safety trades count is how many safety orders the bot will keep open on the exchange at the same time. So you may want to have multiple orders in at the exchange for different levels of safety trades, so that if a coin's moving really fast, you get all three in, or whatever other reason you may have for that. We traditionally don't have more than one at a time, but we'll leave those settings up to you. So price deviation to open safety orders. This is essentially telling the system what percentage you're willing to go down before you want this trade to add to the trade and buy something. So you may set this to 3%, you may set it to 5%, you may set it to half a point. The idea is that this is saying to the bot, when it hits, in this case, 2.52% below my purchase price, I want you to add whatever I set above to this trade. As I said, there's a lot of great documentation in the 3commas wiki about safety trades, and I don't want to spend a lot of time on it, but it can be a very valuable strategy, and it can be a great help to get you out of trades that aren't doing well, but it can also cost you a lot of money. So be very careful with it and make sure you understand how it works before you use it. Okay, this is the final section. We talked about this earlier. You can, to avoid low liquidity coins, especially if you're trading larger sums of money, you can set the amount of volume that you want to see in a coin over the last 24 hours, right? So one of the ways to set this up is to go to coinmarket.com and go to the exchanges pages on that site. And if you're trading on Binance, click on Binance. And then you'll see a listing of all the active pairs they have on their website. If you're setting up a USDT bot, then you can choose the USDT pair type, and you can choose the spot trading only, which is typical exchange trading. Then you'll be able to see all the coins listed by their 24-hour volume in USD. Now, because 3commas asks you for a BTC volume for 24 hours, we're going to go over here to the top right, and we're going to click BTC. Then we can see where coins are trading and low volumes are. So we can see at the bottom that the worst volume on any coin on Binance right now is Chili's, CHZ USDT, which only had 13.93 BTC traded in the last 24 hours. For me personally, that's not a coin I would probably mess with, because you have to consider the fact whether there is enough buy or sell orders to execute your trade for you. It's really important that you make a decision about what your cutoff level is. Here's all the coins up and above trading over 40 BTC in a 24-hour period. But if you note, as you get to the top, these are the higher traded coins in Binance, all the way up to Bitcoin, which trades 22,514 BTC in a given 24-hour period. Make your determination for yourself what you're willing to trade and where you have concerns about liquidity. Minimum price to open a deal. If you have a particular price you want to set, it would be really difficult to do with a composite bot, because you have so many pairs at so many different price ranges. But if you wanted to set a price to open a deal, you could. Cool down between deals. If you feel like things are really dumping a lot on you and you're concerned about the number of signals you're getting, you can set a time limit so that every time a deal closes, this thing's going to wait 60 seconds before it starts another one. So it's after the deal closes and before it starts another one. So open deals and stop. Basically what this saying is if you put a number in here of, say, 12 deals, after 12 deals complete, this bot's going to automatically stop on its own. You may have some reason for doing that. You don't want to trade too much. You're concerned about the stability of something or the market, whatever. This can set a limit so that your bot stops for you automatically. This is allowing how many deals per pair. So we often will get signals in MTF, 4, 5, 6 signals in a given hour period for a given pair. If that happens, do you want to take all of those signals? So do you want to have multiple deals for the same coin? A lot of people do this because if a coin continues to drop down and gets more tier 1 or tier 2 signals, it will allow you to either one, only have one of those open at a time, or two, utilize those further tier alerts down below the price where you entered to create almost a DCA effect to average the cost of your coin down. Others prefer to spread their deals out amongst multiple coins because they feel like it's a better way to spread their risk than having, say, 25 to 50% of their funds invested in one coin because 6 different signals came up at the same time. That's going to be completely up to you, but whatever setting you'd like for that, you do. So it's really important. There's an incredible amount of power in 3 commas, but it's really important that you think through all of the settings you want and you use great risk management to make sure that you're setting up smart trades. So we've set up this bot. We're going to do create bot, and the bot will be created. Then the system will ask you, do you want to start the bot? Are you ready for signals to start coming in and trading on this bot? If you are, then say start. If not, click close, and you can go back and make more edits, or you can add other bots that you want to get set up before you start trading. I chose to turn the bot on, so the bot's now turned on. Now, what's going to happen next is it's going to give me a summary of my deal so far. So you can scroll through and see all the settings you put in. I recommend double checking them and make sure that what you think you put in, you did put in, because otherwise you'll get burned. We have all, as users of trading systems, thought that we had done something and forgot to do it, got distracted, whatever, went back and we didn't make the change, and we ended up losing money on a trade or not making enough money on a trade because we didn't double check our settings. So double check your settings. This section is going to give us the codes that we need to initiate a trade from TradingView to 3 commas. By that I mean there is a set of information here, which is called a JSON statement, that you're going to put into a TradingView alert in order to send a signal to this system to actually start a deal. So when you put in the alert, it's going to have the pair in it. This will get sent from TradingView to 3 commas, and then in 3 commas, it'll see this message. It'll know which bot to execute by the bot ID, and then it'll execute the trade based on the pair. So all of those pairs you put in up here at top, the ones you still have open, when a signal comes in, they'll automatically get executed because TradingView is sending this code snippet to 3 commas saying, start this trade. Now, there are other signals to come in here. You may learn over time that there's a way you want to signal to stop a deal from within TradingView. If that's the case, if you have other indicators or other signals that you like to use to say, nope, got to stop the deals, then you can utilize these. This one will close the deal at market price. This one will close all deals. So this is going to close all deals associated with this bot at market price. This is a message to close all deals at market price and then stop the bot. So as you can see, there's more power you have here. Just be careful again how you set it up and how you use it. We're going to copy this text that we need because now we're going to move over to TradingView and get that set up to send signals to 3 commas. Okay, now we're in TradingView. And there's a couple of things that are really important about your setups that we need to make sure you have set up correctly. The first thing is that you need to load the Mtf Indicator. If you haven't done that already, we do have documentation and other videos on how to do it, but I'll quickly show you how to do it here. So what you want to do is click on this Indicators button at the top of the screen. Then you'll go down to Invite Only Scripts, and then you're going to choose Mtf Deviation on Chart Material Scientist. So click that. It'll get added to your account. Now, in my case, I already had it in there, so I don't have to re-add it. This area of the chart is the Mtf Indicator. It is the tool on the chart that recognizes a condition is set and ready to trade and sends a signal to trade. So this is Elrond. In the last 24 hours or so, we've had a couple of signals on this account. Last night, we had a big flurry of trading signals on ERD/USD, which is also known as Elrond. And these are the signals that get fired that send the message to 3 commas to tell it to book the trade. So we're going to go through setting up a new alert so you can see what that's like. So after you've loaded your indicator, you want to set the settings on it. You can either do that by clicking on one of these little lines in between, or if this is closed, this little arrow, you click it and you'll see the Mtf deviation chart, and then you click on this little gear icon. What's important in this thing, there's a lot of settings that you can change. You can change the colors related to how the chart looks, make it look how you want it to do. You can determine whether or not you want to have both the tiers involved. You can determine whether you want the tier and the chart to be available in higher time frames. By the way, this is a 1 minute time frame, really important. Those are all things that are up to you, whether or not you want those enabled and what you want enabled. The important thing that has to be looked at is the deviation. Now, again, I don't want to give you specific recommendations, but I will tell you how we typically trade and set up deviation for MTF, the Mtf indicator. For USDT pairs, I personally set it to about 3%. That seems to be a pretty good sweet spot for the MTF deviation indicator and for keeping a coin within these ranges that the chart is in. They will still skip outside of it, but for the most part, it'll keep them in. So you should carefully adjust the deviation settings on your chart to make sure you're happy with how it's set up. In this case, we're going to go with that 3 deviation, and we have that in place and it's turned on. So now's the important part. Every time, your goal with this bot is that every time this coin or any coin hits tier 1, you want to set an alert on each TradingView chart for sending a signal to 3commas to fire that alert. So we're going to click on the alert button at the top of the page. And then a dialog box pops up. In it, we'll see create alert on ERD USDT or whatever the pair is that you're on. And then for condition, you're going to choose MTF deviation. And then for the subcondition to that condition, you're going to either choose usually tier 1 or tier 2. In my case, for this bot that we're setting up a tier 1 bot. So I'm going to set up tier 1 long entry. All that means is that this is a little bit different mathematical outcome for trading this and in the algorithm about how aggressively you want to trade it. Tier 1 is usually a little more aggressive. Tier 2 is a little less aggressive. The fact is a lot of us trade on both tier signals, but we wanted to have multiples so that people could adjust based on their comfort level. Again, you should make all decisions about settings based on smart research that you have done yourself. I'm not a financial advisor. Cryptocurrency trading is dangerous. Don't trade anything more than you can lose. So we chose the indicator. We chose the tier that we wanted to trade on or the signal we wanted to trade on. And then we're going to choose once per bar close. You can choose whatever you'd like for the setting in the options field. But we choose once per bar close because we want to wait until the signal is permanently painted on the chart at the close of the candle. We base all of our data analysis on opening a trade on the following candle, and we don't want to create a trade until we know that the signal is final. So expiration time, if you didn't want this open all the time, you only want it to happen over a specific time period, you can uncheck open-ended and put in a date and time. If you want to be notified on your phone or on the app on your web, on your desktop, you can choose notify on app and it'll pop up a little module that you can install to get alerts. If you want to show a pop-up, so in other words, you want a little box to pop up and say MTF signal has come in or Bitcoin has dropped 4% or whatever it might be, that's what that's for. Send an email. If you want to get emails about every indicator alert that you get, that's what this will do. It'll send it to the default email address on your TradingView account. Webhook URL. Now, this is what we want to do on this particular configuration. And so we want to go to 3commas and get their setting for the URL for the webhook. So the webhook is actually going to connect directly to 3commas, and it's going to send the signal as you put it in here in the bottom directly to 3commas. Here you're going to put a 3commas URL that they give us. So we've put in our TradingView URL, and then you can choose a little more. Do you want to send, do you want to play a sound every time that alert pops up? You can pick from a variety of tunes and program that in. I'm going to turn that off. Send email to SMS. Another way to interact with 3commas is via SMS email. We're no longer using that. We're relying more on webhooks, but there's a ton of documentation on 3commas how to do it. And essentially your message is going to be the same. So then the next step is in the message, we want to take that snippet that we got from 3commas for the bot we just set up, and we want to make sure we copied it. Then we go into the alert message. We paste in that message they gave us, But there's one important change we have to make. We have to edit out and put in the current coin that we're on in order for the alert to fire properly and buy that coin. If we don't, it won't know, and it'll buy whatever the token is you have in there. So that's a very important aspect of setting it up. Finally, you're going to click on Create in the alert window, and you will have set up your bot. It'll warn you that this is the type of signal that paints on the screen, and so sometimes there can be delays or offsets or whatever. We haven't found that to be a problem for us, but they warn you every time about it, but you can just choose Continue anyway. Now you can click on the alert list in TradingView and see that your alert is set up and ready to go. And it will start sending signals directly to 3commas for you and initiate trades in the composite bot that we set up at the beginning of this video. Thanks for watching. We hope this provided great value to you and helped you learn how to automate your trades between our Mtf Indicator, 3commas, and TradingView. If you have any questions, please join our community or ask us on Twitter at @mi_algos, on Telegram, search for Material Indicators, and on the web, we're at materialindicators.com. Thanks so much, and we look forward to seeing you in the community.